Be Wealthy and Smart, episode 862.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we are going to talk about the Coinbase IPO and does it look like a good deal? Why is it different than most IPOs? And what is the fair valuation for Coinbase? Well, Coinbase has a lot of interest, and I know my clients in the VIP experience are really interested in this because many of us use Coinbase to buy our cryptocurrencies. We also use another exchange that I like a little bit better, but Coinbase is a US-based company, and it is approved in certain states that the other exchange isn't approved in, so we do use both. I personally have a Coinbase account and I have other exchange accounts. So we want to look at Coinbase because this is a little bit different from the traditional way of going public and taking their shares to the market. So we're going to talk about why Coinbase is doing this, what the pros and cons are. Does this look like something you might want to invest in, or is there a strategy that we could employ that might be a little more savvy? So this article comes to us from CNBC, and it says Coinbase estimates Q1 revenue jumped ninefold to about $1.8 billion ahead of public market debut. And it says, in preparation for its debut on the NASDAQ next week, cryptocurrency exchange Coinbase said on Tuesday the first quarter revenue climbed about ninefold from last year, driven by a historic rally in the price of Bitcoin. Revenue in the period jumped to about $1.8 billion from $190.6 million in the same quarter a year earlier, Coinbase said in a press release, adding that the results are preliminary and unaudited. Net income grew to between $730 million and $800 million from $31.9 million a year ago. Coinbase said it has 5.6 million verified users. And then it has a nice chart here showing that Coinbase from Q1 of 2019 until Q1 of 2021 has a beautiful upwardly sloping to the right chart with a massive income increase in Q1 of 2021. So this stock looks like it's now on a parabolic trajectory for its revenue. The article goes on to say Coinbase is poised to become the latest tech company to hit the market with a massive valuation, capitalizing on continued growth in the sector despite broader economic struggles caused by the coronavirus pandemic. Trading on the private market has valued the company at $68 billion, a number that swells to about $100 billion when factoring in a fully diluted share count. In the past 7 months, software vendor Snowflake, food delivery app DoorDash, room-sharing site Airbnb, and gaming platform Roblox have all gone public. Their market caps are currently between $40 billion and $113 billion. Coinbase is unique because its valuation increase mirrors the trajectory of the top cryptocurrencies. Bitcoin is up about 700% in the last year, while Ethereum has soared by more than 1,100%. So I want to pause right there because that's a lot of information. And what I want to talk about is the fact that Coinbase's valuation is about $100 billion. That's a very, very rich valuation for a company that has $1.1 billion in revenue. They're making about a 1% return on their market cap. And $100 billion is really valuing this at a fully valued number. In other words, they're not leaving any money on the table that this can run up and grow into a bigger number. They're just starting at this massive reach of valuation that they can. In addition to that, they're going public in a direct way, which means they're selling their shares directly to the public in the IPO. So it's not going through the traditional channel of an investment banker like a Goldman Sachs or Morgan Stanley. It is going direct from the company to the public. So they're going to take in massive more money. There's no middleman, and they don't have the middleman also to give a lower valuation on the IPO to start at a low value or to start at, I should say, an inexpensive per share price so that people can afford shares and the price gets bid up quickly. This is more like what Google did when it did its direct offering. And I remember when Google went public, it wasn't all that strong of an offering. In fact, it went public and then it sold off to some degree. I think that's the same thing that will happen with Coinbase. I think this is so richly valued that there's just not a lot of extra room in it to grow into a bigger valuation. Now, the average investor might not be so concerned with how rich this valuation is, but believe me, institutional investors are very aware of this and they don't want to overpay for a company. Now, having said that, a lot of growth companies do sell at high multiples and do sell for rich valuations. So you do tend to have to pay up more if you're getting a growthier company. I also want to say that this article talked about the returns in Bitcoin being 700% and the returns in Ethereum being 1,100%, but it's not talking about a lot of other cryptocurrencies. And not all these are available on Coinbase, but let's just talk about some of the returns of cryptocurrencies because these are insane returns. I mean, you're just not seeing this in the stock market like you are in cryptocurrencies. The average rates of return and the all-time rates of return in cryptocurrencies are enormous. So let me just go down the list and read to you the return rates of the top 20 cryptocurrencies. So these are 1 year returns for the top 20 largest cryptocurrencies. Are you ready for some pretty astounding numbers? All right, Bitcoin was up 721%. The number 2 cryptocurrency was Ethereum that we talked about, up 1,197%. Then the next cryptocurrency, I'm just going to go through the numbers and not name them all, 2,653%. Remember, these are 1 year returns. 442%, 2.1%, 3,626%, a negative 93% on one. This is the only one that has a negative return. It's the 7th largest cryptocurrency. It's actually Polkadot. Number 8, 444% a year. Number 9, 1,276%. Number 10, 166%. Number 11, 1,007%. Number 12, 14,088%. Number 13, 3,934%. Number 14, 829%. Number 15, 3,292%. Number 16, 149,891%. Holy moly. Number 17, 3,142%. Number 18, 699%. Number 19, 0%. That's Uniswap. That is a crypto to switch into other cryptocurrencies. So that did not have a return as it would not be expected to. And finally, the 20th largest cryptocurrency, 10,000% in a year. Can you believe those numbers? That's why I'm saying the compounding on cryptocurrencies is unlike anything I've ever seen. And those were 1 year return numbers for the 20 top cryptocurrencies. Now again, Coinbase doesn't sell all of these cryptocurrencies, and you can see the growth rates that cryptos are going through, and you know that there's a lot of buying that's going on. 6 million customers Coinbase has, and there's going to be more and more coming to the crypto space. So that's why now Coinbase is on a parabolic trajectory, because cryptos are on a parabolic trajectory. So I just thought I would point that out, because I always like to talk about compounding returns as a wealth mentor, because compounding is the way to build wealth. If you read my Wealth Heiress book, you know all about my wealth building formula, money compounding in time, the McT Formula. And the compounding part of that equation is the most important piece. And compounding makes up for starting too late. It makes up for not having a lot of money to start with. It makes up for a lot of deficits that you might have going for you or not going for you, as the case may be. And so a high compounding rate can make up for the other parts of the equation not being large. I'll just say it that way. So compounding is really everything in wealth building. And that's why we're seeing the most affluent, the high net worth, the private wealth management, the institutional investors, they're all getting into the cryptocurrency space now. Both at Goldman Sachs, Morgan Stanley, and other institutions are bringing in their biggest, best customers into the crypto opportunities right now. And it's because of these incredible compounding opportunities that they're bringing them in. The retail investor usually gets offered these kinds of opportunities much, much later. They are not the ones that get the pick of the litter. It is usually the wealthier clients, unfortunately for us retail investors, that get preferential treatment. The article goes on to say, Coinbase said last week that the SEC approved the direct listing, which is set for April 14th. The company has said it plans to register nearly 115 million shares of Class A common stock, which will trade under ticker symbol COIN, coin. In a direct listing, the issuing company forgoes selling new stock and instead allows existing stakeholders to sell their shares to new investors. While Coinbase is heavily reliant today on attracting users who store and trade two major cryptocurrencies, the company is betting on the development of a larger ecosystem of crypto-related assets in the coming years. We expect meaningful growth in 2021, driven by transaction and custody revenue, given the increased institutional interest in the crypto asset class, the company said in the release. In the first quarter, Coinbase said it had 6.1 million monthly transaction users, MTUs. As it looks to the full year, it's laying out three possible scenarios for what will determine revenue, since so much of its business is derived from those transactions. Rising market values could result in monthly transaction users of 7 million, Coinbase's most aggressive estimate. In the middle range, assuming a flat crypto market, monthly transaction users would land at 5.5 million. And the most conservative prediction, should prices drop, is 4 million monthly transaction users. End of article. I believe one thing that this article neglected to mention was the lockup period. Usually with an initial public offering, you do have a lockup period where the employees are not able to sell their shares for a period of time. However, when you do a direct listing, it's my understanding that because you are selling your shares directly to the public, there is no lockup time. And that's one of the reasons why Coinbase wanted to do a direct listing rather than a traditional IPO. So that means that they're anxious to sell their shares to somebody else. They're anxious to lock in their profits. And that means there's going to be a lot of insider selling going on. That also means a lot of volume for selling, a lot of people selling shares into the demand of new investors buying shares will find an equilibrium. But if there's more people selling shares or more shares being offered for sale than there are being purchased, that can disrupt the equilibrium and push it toward a side that can drive down the price. So we'll see if the price takes off like a traditional IPO, or if very quickly it turns and sells off like the Google IPO, if I recall correctly, did when it went public directly like Coinbase is. So we'll see. My strategy and what I'm recommending for my clients and what I've told the VIP experience members is the best strategy on this one, I think, is to give it a period of time. Let the sellers sell their shares. Let's see if the shares pull back. $100 billion seems too rich of a valuation to me. There's not a lot of room in there for growth. I'd love to see this fall back 20% or so, let's say, and be able to buy in at a discount to its originally offered price. So we'll see how it goes. We'll see if our strategy turns out to be a good one. It might take a little bit of time for this stock to pull back, or it could happen pretty quickly. We don't know. But I do believe an opportunity to buy it less expensively in the future will present itself. And that will be a better price point to get in rather than at a $100 billion valuation for Coinbase. I will put a link to this article in the show notes in case you want to review this article and click through. There's some attached links in this article that would help you if you want to do additional research. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And if you haven't yet read the Wealth Heiress book, I highly recommend you get familiar with my money compounding in time formula for wealth building and financial freedom. It'll show you how to get to financial freedom faster. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.